Welcome to the Trading Market Technicals Morning Call video for Tuesday, August 21st. We had another day, another grind day up on very, very low volume. Basically, the indexes continue to grind higher. No interest in selling. Total complacency out in the markets. And I know I've been like a broken record for the last few weeks. But that's exactly what we've been getting in August. And really, believe it or not, the price action is really very similar. The only thing is that volume has really died down the last several years. In August, we're a little bit better, but this thing has now really gone away virtually. There's absolutely no volume. And I do think that the risk is to the downside here. This could go on for another 2 weeks before we get in September. But if you look at the 10-minute chart and if you see where we've been, we've literally popped up, we've grinded higher, and we just bounced around in this channel, popped up, and we went sideways for 2 days, popped up, and then we went sideways for 2 days. So this has really been the trend, just one day up, and everything else is just grinding higher. And again, this type of trading frustrates a lot of traders, but you have to understand that in the summer doldrums, you have to just take a step back. And if you can find an opportunity, whether it be something to do with news related and or an earnings upgrade or downgrade, you really need to stay off to the sidelines and wait until volatility starts to pick up again. Now, obviously, a lot of volatility isn't good at all, but as of right now, we'll take anything. And in this type of environment, traders get in trouble, and it's very hard to make the money back for the day, actually. As far as swing trading, really is non-existent unless you took a long and you encountered that risk, that overnight risk. That would be the only really saving grace here. But I'm not looking to actually just go out and take a shot and risk. That's not what we do for a living. We take calculated risk, and that's what I want a lot of people to understand. Now, interesting developments here. As the charts are grinding higher and moving higher and bonds are moving lower, you get to a point where we have support and resistance, and that's what I found, what I've been looking at actually, but now we're coming to fruition. NASDAQ weekly chart, one of the leaders that we follow, have a double top. And when we see a double top, we have to be very cautious, especially on a weekly chart. 30-year bonds have actually come now to support, acting as bullish falling wedge. Has not broke out yet, so the signal hasn't occurred, but that means that we need to be on our toes and watch. The VIX broke below support, another push lower, and back into the band, I think will create a buy signal for the VIX, a sell signal for the markets. So we have a very anticipated news release, which will be the FOMC minutes come out tomorrow. Really nothing going on today. We have retail sales, red book today. So that really isn't so much of a big market mover. But since we don't have any kind of news coming out, I think this is going to be dissected to see if QE3 really is going to happen or not. And I think that might be a market driver for the next couple of weeks, believe it or not. But we'll see. But let's go into our indicators, and you'll see what I'm saying. You'll see what I'm talking about, actually. Bar chart momentum index. I haven't showed this in a few weeks. It's really nothing has happened. As you can see here, we've been just chopping up and down. We did get up here. We sold down back in this area here, but really no movement in the market. It was just a sideways grind, and this index will just go lower and then now chop around. So this hasn't done anything. And I want to show you the NYMO. I've been showing you the NYMO here. Same thing. So we have room either way to go up and or down. So if we wanted to move higher, we could definitely move higher. And I mentioned last week, I said, listen, I think that the move up can still has room and still have legs. So the 1422 area, 1424 area still is possible. And but after when that's completed, I think that risk will be to the downside. We should have at least a decent correction. Nothing to scare anybody, but I do think we'll have a decent correction, which would be a great opportunity to buy stocks going into the fall. But as of right now, we still have room to move a little higher here, and this is something really that just to keep in mind. Now, what's concerning, and I've been mentioning this to you, obviously the VIX really at its lows here. Okay, we did break lower below this line, but we did manage to get back above it. We didn't break below the Bollinger Band. I'd like to see a big flush out here, and then that would really anticipate me to buy to get long some of the VIX calls maybe. or the UVXY, something like that, just for protection as well. Now, here's what's really interesting. We have Shanghai, which I've been showing you for the past several months. Our ratio is lower. Shanghai just cannot get any type of bounce at all. This is very disturbing for the bulls. China came out last night also stating, having some negative news, talking about more China stimulus in the second half. So this is China's in trouble. And again, all eyes right now are on Europe. And when everybody shifts and all of the traders and investors start looking at China, you're going to see a much bigger reaction to what the market is really doing right now. Because really, there's nobody around. Take a look at copper, because very related. Copper can't even get on its own feet. As you can see here, 3 days up, 1 day down, big down day in copper, and the markets were virtually flat yesterday. So copper is a major warning sign. Now, if it can rally like the other indexes did, then I'd say yes. Then this we could take this area out here, but we really need to take out 358 right here, 200-day moving average. This needs to be taken out before any kind of excitement. Otherwise, we can run up here and just fail here, and that would be that double top here, and that holds. So that's something that's concerning. Now, what's really concerning, and I wanted to show you, is the 30-year bond. This is a daily chart, and if you remember, we had that double top here way back in the end of July, and we popped through it, which was a bull trap, and now we had just drifted lower. And now we're coming into these moving averages here, and we have actually a trend line back from March. So this is a valid trend line, guys, with a bullish falling wedge. We need to really get above, like I'd say, 147 here, break out of 147 on this bullish falling wedge to really get momentum and trigger a long on bonds. Now, if bonds are long, the markets are short. So remember that. If the bonds break out, equities you'll put a sell signal on equities. And I'm going to show you how nice they correlate together with a sell signal on equities. Now let's take a look at a weekly chart. And as you know, weekly takes precedent, right? High time frames take precedent. Here's a long-term trend line back from 2011, starting in April 2011, and this moving average is 50 week moving average right up in here is now getting into support. A little more push lower, and we're into this area of support. Okay, this is very concerning. That we're going to have this bounce. Look what happened here. We bounced and we rallied for weeks and weeks on end. So this is something that we wanted to keep an eye on. So I do say we could have a little more wiggle room to the upside, but I think the upside is going to be limited. Even if we break 1422 and we get to 1440, and that's going to be the 2008 highs, I think you're going to have a lot of bears come out looking to short this market. Because to be at these levels, where the market, just the economy itself is in really bad shape, and that's all because of stimulus. That's all it is. It has nothing to do with healthy markets. So we just want to make sure you guys are aware of that. Okay. Now let's get to the charts, and I'll show you what I mean back in the indexes. Take a look at the S&P 500. As you know, we've been having this little flag pattern here. We broke out of this little flag, and now we're just sitting above this average. So now we have a double top again in the S&P. Now, this is the daily chart. Weekly chart will show you the same. So we're back above this area here, and as you can see, we just grinded higher on virtually no volume. Now, this is the cash, so it's not going to show you the volume, but I'll show you. Look what happened here in the spiders, and that's why I like looking at the spiders. Double top in the spiders. Daily chart and weekly chart. But as you can see here, this whole move up from here, back in the end of July, was on no volume and declining volume, no less. Now the IWM, same thing. Got a couple of good up days here, but just these are just isolated days. And now we had 3 big days up. IWM's caught up, breaking back above here, double top in the IWMs. So this is a critical point for the market here, if you could see, double top on the IWMs. Now the transports. Still valid, believe it or not, this head and shoulders. We're right at the right side of the shoulder here. Anything above this right shoulder, I'm going to eliminate this. But we did break out of the symmetrical triangle, and we're just holding steady here, as you can see. We really had an inside day from yesterday. Nothing really going on in the transports. But still valid, so watch this. Now we're going to have the Qs. This is what I'm looking at. Qs, NASDAQ, big cap tech, double top on the weekly chart. Big area here. If they break this area and the Qs can rally, then I think Qs and NASDAQ will take all of the other indexes, which can because it is a leader, okay? I think it will take this market up to the 1422 and possibly even into the high 30s, 1440 to test that 2008 high. Now, if it does not, and we take out this 67.80 low from yesterday, then I think you'll get some sort of a correction here, and the market will probably fade back down to these averages. So this is going to be really critical. So if you remember, the 30-year bond was at its trend line support, okay, and it's showing a bullish falling wedge where the Qs have a double top. So that's a great correlation, because if bonds are looking to rally or at least set up to rally, and Qs are getting tired, then that's telling me that all eyes are looking for a little bit of a pullback. Again, if the Qs can break above higher, then that pattern would be invalidated, and I would imagine bonds would probably continue to sell off. So this is something that I want you to be aware of. Last chart is our daily chart. Big uptrend channel, low volume, starting here from the end of July. As you can see, double top. So we have double tops in all the indices, especially on the weekly charts as well, which take precedent, and that's what I want you guys to be aware of here. And that's why I say be careful holding long positions. Any day trades, and I know day trades are basically non-existent, but that's going to change. I mean, it's going to change. It happens every 2-3 weeks in August and every 2-3 weeks in December, but then everything starts to pick up again. And there is opportunity out there. It's just very, very quiet right now. So, you take a long position, you get stopped out because there's no support to the market. And that's why I'm concerned, and I want to tell everybody, as far as long-term investors, swing traders, be very, very careful out there. And if you are riding this rally is based on nothing. Tighten your stops, because I do think that a correction is in the cards here, okay? So let's keep an eye on the Qs, and let's keep an eye on the 30-year bond, the USB, and see what happens. Again, a break above the Qs and a hold on a closing basis, then I think we got a shot to move a little bit more higher before we actually have that correction. Have a great day, everybody, and we'll talk to you tomorrow. Take care.